Hello and welcome to this Money Control live stream, the closing bell with me, Yatin Mota. When it comes to the Indian stock markets today, we had a day of consolidation. Weak global cues led to the Nifty falling by nearly 100 points, and the Sensex also consolidated and was down nearly 400 points. However, the silver lining in today's market was the advance decline ratio, which stood at better than 1:1, given the fact that the small cap and the mid cap indices on the National Stock Exchange traded with gains. In fact, if you look at the small cap index, that saw almost a 123 point rally, and the mid cap index also gained nearly 450 points. So, clearly the mid cap end of the market was quite buoyant. In fact, if you look at real estate stocks, media stocks, PSU banks, all of them saw some good gains coming in. However, metal and IT stocks continue to look at some profit taking in the markets. If you talk about Nifty 50 today, we had Pharma and financial stocks clearly gaining and making headlines. Dr. Reddy being the top gainer in the Nifty 50 with 2% or more gains coming in. IndusInd Bank, Bajaj Finance, HDFC Life are the other financials which gained anywhere between half to 1.5%. Losing side, we had stocks like Titan, Adani Ports, TCS, Hindalco, all of them down between 2 to 1.5%. So, the select move in large caps led to the market consolidating in trade today. However, as I mentioned earlier, the mid cap end of the market was quite buoyant. We had stocks like Sun Pharma Advance gaining by nearly 9%, 5-star real estate players like Oberoi, New India Assurance, all of that saw some good gains. In fact, Oberoi Realty saw a double upgrade from Spark Capital. They have a buy on the stock with target of 2,600, and the shares rallied in trade today. Also, stocks like Hudco, Action Construction, Dixon Technologies, Prestige, Affle continue to gain and make new 52-week highs. On the losing side, we had stocks like Angelone, Deepak Fertilizer and Chalet Hotels consolidating in trade, 4 to 5% kind of a decline coming in there. But stocks like Keynes Technologies, Affle, Dixon, Paytm, HBL Power continue to make fresh 52-week highs. In fact, stocks like Indian Hotels, CDSL, BSC, LTI Mindtree, as well as Vedanta continue to hit fresh 52-week highs. So, good momentum in select stocks. The markets, despite the fall in the benchmark indices, continue to do well, and stock specific action continues on Dalal Street. But today on the show, we have someone special. We have Aamar Deo Singh, Senior Vice President, Angel One, joining us on the show. Aamar, thank you so much for taking out the time and joining us on this live stream. Talking about the markets clearly in consolidation phase, but do you think from here on mid caps will tend to outperform, and overall action on Dalal Street will be very stock specific?
I would say that what we are seeing in the markets on the broader term, we are seeing some sort of consolidation and some sort of profit booking, because what we saw was a very sharp rally in the indices. And also what we are seeing is that stocks across the mid cap and the small cap, to a certain extent, some of the stocks have been rallying. And if you look at sector specific, we've seen some very good movement in the IT space across the board. We've seen some good traction coming in the private sector banks to a certain extent. And also there are some hopes of further up move in the public sector banks as well. So some of the sectors are likely to perform well, and also markets this week are waiting for cues from the US Federal Reserve meet, which is on Wednesday, as to what is it going. It's expected that there will be a 25 basis points cut, but what is the statement of what exactly it is? That's something which the markets are definitely and keenly awaiting.
And Aamar, talking about the Nifty and the Sensex, any particular view that you have for the short term, because we are at the year end and possibly for the new calendar year, what would be your view for the Nifty and the Bank Nifty? Do you see a significant amount of upside in both of the indices?
See, if you look at, first I'll talk about Nifty. So Nifty is, from a long-term perspective, the trend definitely continues to remain positive, no doubt. However, from the intermediate term perspective, we are seeing some sort of consolidation. That's the reason, post the sharp recovery which we witnessed in Nifty from almost 23,000 levels, 23,200 odd levels, Nifty bounced back significantly towards the 24,800, 900 levels. So what it effectively means is that higher levels, anywhere between 24,800, 25,000, that's going to act as a zone of supply. and a zone of resistance for Nifty from a short-term perspective. Or on the downside, Nifty's got strongly supported on the 24,000 immediate level of support, and then the recent low which it had made of 23,200 and 63. That's a short-term top, a short-term bottom. So effectively, it means is that there is some positive bias in the markets, but for any major rally, Nifty would need to sustain over the 24,800 levels. As far as Bank Nifty is concerned, what we've seen in Bank Nifty tells a slightly different story, primarily on the back of HDFC Bank hitting record highs, and HDFC Bank has a major weightage in Bank Nifty, almost 30% plus. So somewhere or the other, HDFC Bank has really led this rally, and to a certain extent, ICICI Bank has also helped Nifty Bank. Now, looking at Nifty Bank is closer to its record highs, but still it's somewhat far away, which was around 54,400, 500 zone. So any pullback is a buying opportunity. We'll also have to see how the banks really means the banks, how they really manage going forward in terms of rate cuts or in terms of the credit offtake. As far as the support for Bank Nifty is concerned, important support is somewhere around the 51,800, 52,000 levels, but Bank Nifty is definitely on a stronger wicket as compared to Nifty technically on the charts.
Okay. Talking specifically about the mid cap end of the market, what's your overall view? Any mid caps or any large cap ideas that you like at Angel One?
So if you look at some of the stocks, I would say amongst one of them is Bharat Dynamics. Definitely one can look at this stock. The stock had corrected from the defense space. So the defense space had corrected from almost 1,800 levels towards 1,000. Currently, it's bounced back. And the long-term trend for the stock remains positive. Intermediate-term trend also, we've seen some upside move. For the last few days, the stock has broken out of around the 1220 zone of resistance, and currently it's around 1280, 86. So this is one stock one can definitely keep a close watch on. This is also one stock which one can look at from a longer-term perspective in terms of stock SIP. I think that opportunity is also there in this particular stock.
Okay, these are the few stocks you need to keep on your radar. But today, one stock which was in focus, that was Dixon Technologies, one of the top gainers in the future and option segment. Obviously, the company announced to the stock exchanges that they will be forming a joint venture with Vivo India, one of the leading manufacturers of mobile phones, and obviously Vivo is a good mobile brand. Talking about Dixon Technologies, the joint venture will be a 51% owned by Dixon Technologies and the balance 49 by Vivo. And remember, a few days back, we had Dixon Technologies which announced that they will be manufacturing the Google Pixel phones in India. Clearly, this theme has been looking like a China plus one kind of a strategy when it comes to mobile manufacturing. And clearly, Dixon has been one of the beneficiaries. Stock is at new record levels, and we have Nomura, which few days back came out with a report with a target of nearly 18,654. Obviously, the stock is well above that level after today's rally. But I think brokerages will have to now keep reviewing the target prices, given the fact the stock has been clearly giving a big rally as such. HSBC also has a buy call. They have recently raised the target to 16,600, but yes, the stock has clearly shot up beyond that level as well. However, the most important point in the recent HSBC report on Dixon Technologies is the fact that till FY27, they are expecting a 50% compounded annual growth rate when it comes to the profits of the company. So yes, strong growth, new business verticals from air conditioners to refrigerators, televisions, and now mobile phones is something that could bring new growth avenues and revenue streams for a company like Dixon Technologies, which has clearly been the blue-eyed boy of Dalal Street, especially in the EMS theme or the EMS segment. Would like to come to you specifically, your view on Dixon Technologies, Amar.
So see, if you look at Dixon Technologies, I would say that this is one stock which really seems to have defied all laws of gravity. And the stock has witnessed a spectacular rally. If you look at it from this quarterly perspective, current quarter, it's up by almost 36%. If I look at from the year till date, it's up by almost 1 190%. So that clearly tells me that the stock is very strong technically also on the charts, because some of the technical indicators definitely point towards overheating. But despite that, the stock isn't really witnessing any correction. It did consolidate towards the 16,000 level. So between the 14,000 16,000 range, it was trading for quite some time. And once it breached that 16,000 level, the stock is today inching towards the 19,000 mark. And also what we're seeing is, for the last few trading sessions, including today, we've seen some increase in volumes compared to the average daily volumes in this particular stock. So from that perspective, the stock remains strong and positive. Those who are long, they should hold on to their positions. We're not seeing any trend change on the short-term perspective as well. Fresh entry at the current levels might be slightly risky.
Okay. Amar, I will come back to you in a bit with respect to the mid-cap IT space, but Persistent Technologies is one stock which is on our radar as well. Today, JP Morgan has put out a report. They are overweight on the stock with a target of 6,100. Now, we have seen all of these mid-cap IT companies, especially the IT stocks, hit multi-year highs, given the fact that post the US elections and President Trump coming in, we have optimism of discretionary spends which could happen in the US, which could drive IT earnings. The BFSI segment also in the US has seen good trends. Now, obviously, JP Morgan believes that client mining winning in vendor consolidation, generative AI pivot is also something that would keep earnings afloat for a company like Persistent Systems. They are expecting that the gradual pickup in the high-tech segment also will bring in growth. Apart from that, generative AI, which is probably looking at a 25% productivity boost, could drive the overall order book for companies like Persistent Systems. And elections as well as Fed rate cuts are now behind, and now with priority on growth and decision making coming in from the US corporates would benefit companies in the Indian IT industries. Obviously, Persistent Systems has done well. Last 2 quarters have been good versus market expectations. Stock has also been doing well. Also, let's rope in Amar for a view on IT stocks. Amar, any particular view on IT stocks, the likes of TCS, Infosys, or if you could give us a view on Persistent System itself?
First talking about Persistent Systems, see, this stock has definitely been a performer. This quarter itself, it's up by almost 20%. Year till date, if you look at it, the stock is up by almost 80%, 75, 76% to be precise. And also, it's not showing any signs of weakness on the chart. So technically, what happens is that the trend might be up, but is the momentum being sustained? So that definitely is being sustained here, and we are seeing that momentum there on the charts as well. So currently it's on 6,500 odd levels. The stock has got good support coming on the 6,000, 6,200 zone. Those who are long, they should definitely hold on to their positions till there is a trend change. And fresh entry, however, would not be advisable. Coming to the other stocks which you mentioned in the IT space. So if I look at some of the major players in the IT space, like Infosys for that matter. So we are seeing that Infosys is also in an upward trajectory. However, on the intermediate term charts, we are seeing some sort of consolidation. It's unable to breach the 2000 level. So sustaining of the 2000 level is something which is very important for Infosys for any upward move. And looking at the other stock, if I look at TCS for that matter. So what I'm seeing in TCS, again, TCS is still, I would say, slightly away from its all-time highs, which was around 45.88. So it's still slightly 45.90 to be precise. So 4,500, 4,600, that's going to act as a zone of resistance for TCS. If you look at either of the stocks, Infosys would be a better pick, provided it sustains over the 2,000 mark. Then we could witness a rally towards the 2,100, 2,150 levels.
Absolutely, IT stocks are clearly in consolidation mode. But yes, since the last 1 or 2 quarters, there was confusion on the street, and IT stocks have clearly been on the contra side when it comes to the investor perspective. People are expecting IT stocks will correct, but it is the other way around with IT index also at a multi-year high. Amar, thank you so much for speaking to Money Control and taking out your time. Thank you so much for joining.
Thank you.
So that was the view coming in from Angel One, and that's all we have on the closing bell on Money Control. For all your other business news and updates, stay tuned to Money Control. We'll see you tomorrow morning with the opening bell.